Andre here, and I want to talk to you guys today about how to prepare for an imminent recession. I got data from an economic issues and trends conference, and it pretty much broke down that a recession is imminent, but it's a matter of will it come in 2020 or will it come after? And based on the data that they provided, I'm going to do some basic deductions. I'm not an economist, but anyone can take data and do, mathematics and understand that historically, looking at the chart that I'm going to show you guys today, hopefully you guys make it through the entire video, but I'm going to show you guys, from data points from the last 10 years that a recession is in fact pretty close, and it could happen in 2020, and what to do and how to prepare for, to sustain yourself during and after the recession. And it's not a bad thing that a recession is coming. You just have to be prepared and be liquid to take advantage of what happens in the market, whether it be with real estate, stocks, or whatever the case is, so you can take advantage of the next recession. A lot of people think it's gonna be like 2008, the housing market's gonna crash, but it's not gonna be the same because there's regulations that have been put in place so that what happened in 2008 can't happen again. There may be a 30 to 50% drop in houses, which I think that's a stretch. I'm not an economist, like I said, but just, based on numbers, I think there may be a dip. But even if there's not a dip, there's certain ways that you can provide, value to people who may be losing their homes in a recession. So people will still lose jobs, people will still get divorced, and there are certain strategies that you can, as an investor, help people in those situations. So, I'm gonna, look at the chart that I give you guys today, look at the data points for the last 10 years. A lot of people don't know that market cycles every 7 to 10 years. The last recession, which was the Great Recession, was in 2008, 2009, and right now it's 2019. So we're clearly out of that cycle, and we're going into 11 years of the last recession. And so when I show you these data points, you will see that the consumer pricing, not consumer pricing, but the consumer spending is going down. You'll see, just look at the data. Hopefully you can watch it through the entire video. The video is kind of long, longer than usual, but I'm showing you guys different data points that you need to be on the lookout for. So you can also see historically that we are coming to a recession. And then I'm going to provide different points in real estate that you can take advantage of in the recession. So it won't be a bad thing. Don't take it as like, oh my God, we're going into a recession. What am I going to do? Take notes from what I'm going to show you guys today. And in the end, I'll provide my information for the data that I'm going to show you guys today. I'll send it via email. So you can, you don't have to screenshot the data on the video, but I'll provide it to you in email. But anyway, guys, take a look at the video I'm going to show. It's in a webinar format. I'm still going to be speaking. And again, a recession is definitely imminent, but don't be afraid. Be prepared. You know what I mean? Preparation meets opportunity, and that's what I think a recession is. So stay tuned. Definitely take out a pen and pad and take notes, okay? See you at the end of the video.
What's going on, guys? As I mentioned earlier, I wanted to give you guys data from an economic issues and trends conference. And I'm not an economist, but you guys can take the data just like I did and do simple deductions and see that we're headed for a recession. All the information I'm going to show you guys today clearly points in that direction. It doesn't take, a math genius to chart out stuff. I'm going to show you how to chart things out, but I don't want to take too much time. I don't want to make a 35, 40-minute video, but I may speak really fast, try to get and condense as much information as I can in a short amount of time. But if it does go past, 25, 30 minutes, I think is still worth your time to look at, so you can be prepared and know what to do in case of a recession. So I want to show you guys how to prepare, what to expect, and really, believe that a recession is definitely imminent and that it is definitely coming. So one of the first things I want to show you guys is the 10-year growth chart. And so as you can see here, 10 years of sustained economic growth. Back in 2007, it showed that we had great growth, but then a year later we went in the negative, and a year after that we bottomed out. This data is showing that there is no growth slowdown, but one is clearly on the horizon, because back in March when this was created, consumer spending was significantly down, but it hadn't caught up to certain growth metrics yet. I think one of the main reasons why the economy is still showing that it has some great growth is because of the expenditure increases in 2018 that Trump did which I think created a larger deficit, which will probably be the largest in history, I think, you know what I mean? But, again, I'm not an economist, but historically data shows that it is the largest. But that money went to the wrong place, which in fact didn't alleviate stagnation, but it made it worse by not contributing to the sustainable growth. And obviously, based on us heading toward a recession, I think the money went to stocks or something like stock buybacks, and it didn't go to really stimulating the economy. It just went to make, other people richer. But again, looking at the chart here, it looks like we're at an all-time high, but that makes sense considering when Trump injected that amount of money into the market and it didn't do anything for us. It actually pretty much created, I think, more inflation. But like I said, consumer spending was down back in March. So look at this, 1.2. Consumers aren't confident. And I think people forget that right before a recession, consumers are still spending because the data that's provided, I don't know if people look at it, but on the news, they don't really publicize that we're heading toward a recession, and then the indicators are there though with the Fed cutting rates and things like that, but people just don't pay attention to things like that. But as you can see here, the market was doing good right before the market crashed. So 1 year before the market started tanking, boom. A year later, we in the negative, and then a year after that, we bottomed out. And like I keep mentioning, market cycles every 10 years, every 7 to 10 years. And so right now we're currently in a overdue for our cycle change because this is '09, we're 2019, but the recession, the Great Recession was in 2008. It just bottomed out in '09, but it was started back in '08. And now we're in 2019 going to 2020. So we're clearly long overdue for the market to cycle out and to pretty much, I call it, repairing itself. If you could look at the consumer confidence, it remains stable, but that's one way that they want to put it. Oh, consumer confidence remains stable. No, we're kind of at a stagnant point. So it's not stable. People just aren't spending. So we're kind of stagnant because people are trying to figure out what's going on. Feds are cutting, rates, and people that have any kind of knowledge of how economics work, they understand why the Feds are cutting rates. You know what I mean? So here, obviously, we were at an inflection point. But as you can see here, the curve has reached a resistance point. And I think this is actually subject to inversion. Because if you see here, it's starting to invert. You got to look closely, but boom, to me, it's going down. I chart stuff out. I've been doing, stocks for a while, and it's the same. Just give you a quick tip, on a side note. When you're looking at stocks, you do a 5 to 10 year chart. So you look at the growth, or look at the chart over the last 5 years of a stock, and you can see exactly where it is. So right now, if someone would chart this out 5 years, they would have saw that in 2007. The stock was at an inflection point, and then it started going down. So you would hop in here and do a put option because clearly this thing has no sign of coming back up, and you would just ride it out. So take that same approach and look at this chart. So clearly we were at an inflection point in 2017, and boom, it started going down and it bottomed out. So in a matter of 2 years, we were rock bottom. So I don't want people to think, oh, as soon as a recession hit, no, you don't have time. You know what I mean? Historically, once it starts to invert, we're long in advance in front of a recession. Well, what people don't understand is that by the time it bottoms out, it's at our doorsteps. And most of the time, we're like unprepared for that. So once the curve starts to steepen, the recession is closer and closer. When the Fed gets into rate cycle cuts, as they are now, that's pretty much giving all of us an indication that a recession is coming. And they're trying to get in front of it and try to slow it down. But there's no slowing it down considering the amount of money that was pumped into the economy, the amount of time that we've been in a growth cycle, again, consumers are not spending as much. So obviously, it's hard to predict human behavior, but data suggests that we're headed for a recession. And anytime the Fed does rate cuts, that makes its bottom out significantly worse. But one of the key indicators to me that is most evident is the consumer confidence. And right now, consumer confidence is obviously stagnant on this chart, but on the one that I just showed you, it's about 1.2, and this is back in March, so I'm pretty sure we're in the negative by now. But people started to spend less. And as you can see, the data from here, I believe that number is a lot lower. So one of the things that you should watch out for is if you can pull up the data from consumer spending, pull it up. It'll give you an idea of where consumers are right now. I think we're in a pullback, and these are common signs that we're obviously in a pullback because people are spending less. And based on a 10-year chart, we're at record lows for spending. So if you look at historically how recessions work, the data suggests that we're about 12 months out from a recession. This is data from almost 8 months ago. So in my opinion, again, I'm not an economist, but in my opinion, we're headed to a recession probably 6 months from now. I think before the election hits. Historically, anytime before an election, the economy gets stagnant anyway, because obviously you want to know what the new president's going to do and things like that. But this was going to be completely different. So this is back in March. We were at, 8 months later, and 6 months from now, we're going to be coming up on 14 to 16 months. So I think we're going to be bottoming out, because if you looked at the chart that I just showed you, we were at 1.2. That was 8 months ago, and it wasn't going up. This is clearly showing that we didn't go up, and we've been going across, which is starting to, again, invert here. So I honestly think that by June or July of next year, we'll be in a recession, and I think by the end of the year, it'll bottom out. So I don't want to scare you guys. I just want to prepare you guys just to understand, given the data that I'm showing you now, do your own deduction. Take the information that I'm giving you and go do your own research and do your own due diligence. But you can clearly see based on, economic data that it's coming. So we should just be prepared. And like I mentioned, before, I'm getting liquid so I can take advantage of what's going to happen in the market. It won't be the same because of regulations from before, but it's obviously imminent. And, that brings me to my next point. Real estate, and where to focus your real estate. Obviously we got strong job growth in certain markets, and but one thing that you can look at in terms of job growth, the economy as of this in March was doing really good. The economy was hot, but this is a great point I want to point out as far as markets to invest in. If you see here, you can see that the growth in Nevada, which I want to assume that's Las Vegas, is booming. You know what I mean? Because of all the growth that's going on in Vegas. And then on average, I think it's about 1 million people move from Cali to Nevada every year. So a lot of people are leaving California because of the cost of living, and they're going to Nevada. And so Nevada's booming right now, and especially Las Vegas. Las Vegas, the health industry, what they're trying to build the infrastructure for that. And then you got the Raiders going there. There's a baseball team going there. And from what I've heard from locals is they're probably going to get a basketball team. One of I can't think of the guy's name, but he's a billionaire, and he does a lot of funding into UNLV's programs as far as healthcare and other things like that. And he's putting a lot of backing behind building out the infrastructure for the healthcare and sports and things like that. So it's just a really hot market. But looking at this chart from a real estate perspective, these would be the areas you want to invest in, because obviously where there's job growth, that's where people are going to be moving to and trying to find places to live. So ideally you want to get into a market that's super hot, and people are going to be looking for homes. And this is one reason why I took a strong stance in going to Vegas, starting in 2020. Vegas and Orlando, because Orlando's another hot market. Those are the only two markets that I'm really going to focus on. Vegas being number one, because for one, it's only 45 minutes for me on a flight. so I can get there in a shorter amount of time. But look at the chart. It is the only red state on the entire map as far as job growth goes. So why would you not invest in that market? And the cost of living is cheaper, and the market prices are kind of aligned with what you would get in the South or kind of in the Midwest. So the price points aren't that bad, but they're going up. I know I was talking to a couple people in Vegas when I was there 2 weeks ago, looking at one of my properties, and the agent has been an agent for about 17 years, and he was like, man, I remember in 2000 and I think he said 15, when the house like this was only 200 grand, now it's worth like 400. So you can just see that the growth is coming. So looking at this, obviously Vegas should be your number one choice, in my opinion, if you live on the West Coast. And if you're in the Midwest or Arizona and you're interested in you're listening to this or watching this, I think that's a hot market. Obviously, Arizona's doing good. Seattle is doing great because of the tech. Florida's doing good because of the growth. Orlando, and specifically because I think they got like $300 million in funding. This was about 4 years ago, maybe 5, because it just took off after that amount of funding because they moved the Pro Bowl there for one reason. But Orlando's booming for job growth. So is Vegas number one, I believe? It's between Vegas and Orlando that are number one as far as job growth goes. But I really want to say it's Orlando from last I've heard. So that's another market, and the cost of living has gone up there too. So when I lived there for about 10 years, and I could get a 1-bedroom apartment, actually 2-bedroom. I had a 2-bedroom apartment for $661, and it was a nice apartment, great neighborhood, gated community. And now that same apartment is, I think, renting for around $1,700. So another hot market to invest in. They put in, I think, 3 new theme parks. So obviously jobs are going to go. I think last I heard too, Universal, was trying to fill like 30,000 positions. So another reason why, but it's also Disneyland. It's like that's the area where you can always get a job at a theme park. And so Florida's also one of the states where if you're not a fluent English speaker and you're, Spanish is your first language, that's where you will want to go to build a foundation and to live a life if your English is not that great. So you got a lot of people that are from the Latin community or Latin America that are migrating to Florida, which again also stimulates the economy and gives a need for places to live. So it's like they need homes, they need apartment complexes. The development in Orlando is booming. So you can either, I don't suggest getting into development if you don't have any real estate experience, but if if you have people that do and you can get in, I would get in on that too. But just the opportunity that are available in Orlando is ridiculous. Between Orlando and Tampa right now is where you want to be at if you're in the South or if you're in the Midwest. So you got a couple markets if you're in the Midwest that you can target: Vegas and Orlando. So if you're in Georgia, Alabama, South Carolina, Florida, target Orlando or Tampa. 2 booming cities. I lived in Tampa for a year as well. Great city. So please, looking at this map, take a screenshot of this map and look at Texas. Obviously Dallas booming, San Antonio booming. These are all great markets. Dallas is a little oversaturated right now, but again, in a recession, people are going to lose jobs. But you can already see the trend in these markets from only a year ago. So Arkansas, Little Rock may be the exception, but you see these 0 to 1% states. I wouldn't do that. I wouldn't touch those unless you're currently living in those cities and you have some local information. They're doing some local growth that you know about. But focus on Nevada for sure, in Texas and Florida. And so another chart here, as you can see. Charting out things will help you out tremendously. And so look at the property price growth in these markets. Look at this, man. It's insane. So here again, 2007, we were at a peak. People made a lot of money in this. And then, boom, it bottomed out in 2009, which you just saw on the other chart. And then it came back up. And so, people think that in the next recession that home prices are going to drop significantly like they did in 2008. That what happened then won't happen again because of the regulations that were put in place post that recession or doing that, because essentially the housing market is what caused that in the first place. So predatory lending, banks like Countrywide, those, those, what do you call it? Verbal stated income loans. We're getting people in a situation, and then those adjustable rate mortgages. And so people were saying, hey, I'll make 10 grand a month to get a super nice house because they can probably afford it at that time at that rate. And then when the rate adjusted based on the market and it went from maybe 1% to 9%, that's what killed the market. And so that's why we end up with houses, so many houses going into foreclosure. But as you can see here, the property price growth is insane. So don't expect to be able to do what happened in 2009. That was, kind of like a one-time thing because of the regulations that were put in place because of what happened with the houses. So the prices will still drop. I would say maybe 30% or somewhere in there, between 30 to 50, possibly, in my opinion. I would expect something like that, but people will still lose their jobs. So the type of strategy that we teach people is subject to and wholesaling and other strategies. So fixing and flipping is an option all the time in any economic climate, but the way that we show you how to do a particular type of real estate, you can capitalize on in any climate as well. So with less risk. So just know that the prices won't bottom out like they did. You're not getting pennies on a dollar, houses pennies on a dollar like in 2009. But people will still be losing their jobs and they still will need help. And with the particular strategies that we teach, you would be able to go in and help them and also make, a substantial amount of money when that time comes. So I think you guys should focus on learning different strategies to take advantage of the next market. And low vacancy rates, rental vacancy in the certain markets here are below 7%. So any situation like that, you can get a house or a apartment complex or a multifamily unit, and it's going to be rented out like that. So keep that in mind when you're looking at a rental vacancy chart, and you see like, man, look at all these different markets you can get into, and you will pretty much have a really low vacancy rate. So take into consideration when you're looking at this, take a screenshot of it, take a picture of it. I'll leave it up here for a second, but it just gives you an indication of once you get these homes during the recession, however you decide to acquire those, make sure you do it in markets like this because you will have a very, very low vacancy rate. And so stick to the areas that are in red. And again, looking at here, Arizona, Nevada, it's not happening there. LA has quite a bit. Washington, again, because of the tech going on there. So, obviously you want to hop into the red markets to make sure that you get a good little return on your investment in a shorter amount of time and not have a high vacancy. But yeah, again, this is just things that is being talked about in the real estate community for those that didn't have access to the economic forum. And again, here go the top 10 job gainers. So boom, California, obviously, Texas, Florida, that's a shocker. But look at these markets, man. Again, I'm telling you guys, this is where you should be trying to, buy properties. If you want to invest out of state in a different market, look at this. Take a picture of it. Screenshot it. And this is between 2012 and 2019. These markets are getting stronger. And I didn't even know Florida was, booming for tech. That's something new to me, but it makes sense. Oh, Miami. That's right. Since 2016, Miami has also become a tech hub for a lot of things. As far as tech, they have a couple of accelerators down there. They do quite a few tech conferences. And there's this really big tech company, I can't think of the name of it right now, that hosts a lot of events in Miami as well. I got invited to speak at one of them in 2017. but I think I had to go to Spain for another conference, so it didn't work out. But here's another way for you guys to gauge where you want to invest in. And these markets, even if you're on the call and you want to know how to survive in a recession, if you're in a market like Wyoming and it's looking like you might get fired or it might be some layoffs, look at this. Look at these markets where you want to go. So you want to, if you work in tech at least, these are where you want to head out to. Seattle's close to you. Oregon's pretty close. Obviously, LA. But these numbers are staggering in Texas and California and even Florida. Wow, this is insane. But focus on these, like I said, the red states. But a recession is imminent. As you saw before in the chart that I just showed you, the recession's coming. It's a matter of time. And this is just a matter of being prepared. So it may not be, looking at the chart, it doesn't seem like 2020 is going to bottom out. But maybe toward the end of 2020, it could bottom out. So you obviously want to be prepared because looking at it now, it's November and the charts are trending downwards right now. So there's still about, 14 to 15 months to go. So it could. It was a quick dive, as you can see, between 2007 to 2008. It was kind of at the resistance point. And then 2009, mid-2009, it just dropped out. So right now, I just showed you guys we were at that resistance point. And I'll go back to it again and show you guys the resistance point where we're at. But you can see it's been a resistance point for about the last year. So it could definitely just bottom out next year. And it wouldn't be a surprise to people that are watching this because you just saw the chart. I'll go back to it in a second. But I'm just moving through some of the things that I want you guys to see. Opportunity zones, that would be great for people that are getting into real estate. There's 8,700 markets that have opportunity zones. So for again, I'm going to go back to Vegas because I'm a huge in Vegas right now, and I will be for the next 2 to 5 years because it's going to boom. Mark my words, it's going to boom. I've been going to Vegas since I was 21. So I saw when the market hit and the city center couldn't be built until some investors from, I think, Israel came in and finished it out. So I've seen Vegas just grow exponentially. It's out of control. So that's why I'm heavy in the market now. I just showed you the reasons on why you need to be in that market. But, I'm going back to Vegas and opportunity zones because downtown Vegas in the art district, if you buy an opportunity zone property in Vegas, they're going to give you $100,000 just for buying a property in the opportunity zone in Las Vegas. So I'm pretty sure other states are doing the same thing. But specifically, I'm just giving you data about the markets that I'm in and that I think other people should be in. Take that $100,000, do whatever you buy another property in that market. If you already have cash, set aside to renovate a particular property, get that property anyway, take that $100,000 and do something else with it. Buy another property in the opportunity zone, get another $100,000 and just keep going like that. And it'll also help you reduce capital gains tax. So if you guys don't know, if you buy a property in the opportunity zone, for 5 years, you don't pay any taxes. Oh, I'm sorry. For 5 years, I think it's 25%. And then I think, 10 years, it's, 100%. And then 2 years, I think was 10%. Don't quote me on that, because I haven't looked into it in quite a while, but I have a guide that I can send out if people are interested. I'll leave my email at the end. And if you want this opportunity zone guide that breaks all of this down, I'll send it to you via email. And it breaks down the year mark on how much you would save on capital gains taxes based on when you invest and how long you're in. So I'll shoot that over. But look at this. They're giving people. This is why I'm happy I was able to get the data from the in a PDF to share with people. But look at the opportunities you have. And number one is opportunity zones. We reduce capital gains tax, affordable, multifamily, senior housing. That's another one, man. If someone can open up a housing and healthcare facility, oh my God, student housing. But I'm just going to focus on senior housing and healthcare. Like, you can get money, you can get grants for having a halfway house for people coming out of, certain situations, and you can put them up in your house for however many days, and you'll get paid per person, I believe, who's in your house. So you get money for rent. So again, get a property if you don't want to fix and flip to regular tenants, get it, flip it, and turn it into a healthcare or a halfway house, or get a 16 or 17 unit. Just get into these two specific fields, senior housing and healthcare, and you can make money from the government. You know what I mean? So that's another option that you can do on top of fixing and flipping. So you can get the money from the equity that you just forced into the house, and you'll get money from the rent roll coming in. You'll get money for tax write-offs. You'll get money for maybe even for providing certain things to the people in the house. I don't know what you would put in there, but there's so many different ways. Again, you can take advantage of real estate and the government and do it in the opportunity zone. So it's like, look at that. There's so many different ways. You get $100,000 from buying in an opportunity zone. You get to save money on the capital gains tax. You get to get money from the government for choosing healthcare or a halfway house or something like that. So, man, the list continues. So, but looking at this, these are all some of the things that you guys can do to take advantage of real estate in the recession. And this is why I love real estate. So I'm going to go back to the chart again so you guys can see that. Let me see. What is this? Here we go. Lack of inventory. That goes back to the vacancy. You saw those markets where they have a low vacancy. It's because there's not enough inventory. And so, doing development would not be a bad idea if you have the money and you have someone with the experience. So I was working on a development in Vegas for a 160 unit condo complex on the southwest part of Vegas, maybe 10 minutes from the new Raiders arena. And it's still in the works. We're trying to get funding for it right now. And, the land only costs like $2 million, in development would have been, I think the development's going to be close to like $10 million. I think we were going to be all in $22 million, to say the least, but we were going to be able to make 57 million or something like that. So, if you got the support system to do it and the funds to do that. But keep in mind, if you're trying to get into development, with the tariffs going on with China, that can impact your development and slow it down. So, if that's not your forte, that's not something that you're used to, I wouldn't say get into it, but just know that that's an option because there is a lack of inventory. So it won't be a waste. It's just like there's so many things that can pitfalls in development based on what's going on between the U.S. and China right now. So, but these are just a list of things that are challenges that are out there in the market that everyone knows about if they're in real estate. So, again, screenshot, take advantage of it. And, thank you guys for being able to provide something like this. And, I'm going to go back here to show you guys the chart again so you guys can see what markets to invest in. So again, like I was saying here, in 2007, it started dropping out, and it was a fast, look at that. And so in a matter of a year, the market bottomed out. So back to what I'm saying, you have this resistance point here, so it could easily do the same thing. But again, the housing market will not do the same thing. Jobs and things like that possibly will do that. The consumer spending shows the dip here as well. I can't find the other chart. But you can just see here. So in a matter of a year. So like I was saying, it could bottom out. Looking at the chart, I was thinking it was more stable for a longer period of time, but clearly it was not. So it took a year and it boomed out. So, man, these are just different things that you can do. And now you can kind of see that you should be prepared for the recession that's coming up. It is imminent. So I'm just trying to provide you guys with different things that you can do, different places that you can go. One thing I want to talk about with real estate, and like I said, I'm going to give you guys a quick, thing that you can do as far as real estate to take advantage when the recession does come. So right now, we're experiencing one of the greatest transitions of wealth in the history of the world. You got the Industrial Revolution with technology, and so many people are entrepreneurs now, and technology has made that. Amazon has made that a possibility. Just technology in general has been providing people with tools to be able to live out their dreams and fulfill their purpose. And so, 53 million Americans are working for themselves. That is oh my God, that's a staggering amount, which makes sense. So it's up to everyone to carve their own path. And so Amazon, you got Viral Launch that can help you with Amazon selling. One of my friends made $47,000 on eBay in 60 days selling AirPods. So it's just like, it's so many different things out here. New business model creation. That's one of the things that I deal with in InvestFar. But you got the automation and artificial intelligence. So there's so many different things that you guys get into. You just got to do your research. And I created a tech platform to automate real estate investing that I've been working on that's going to, change the landscape of the real estate industry so people can, again, be their own boss and with real estate, which is something I think is great. And so I myself have created a new business model that falls in line with one of these things here, which was one of the industrial revolutions of our time. And I'll talk more about that later. But as I mentioned before, there's going to be massive amounts of opportunity to buy at a large discount coming up in the next market cycle. And I just showed you guys where those opportunities are. So do your research even further from what I'm showing you guys, and be prepared. You know what I mean? If you got money coming from your taxes coming up in February, keep that money as you already see what's coming. So do your research now, learn about real estate, the different aspects of real estate, save your money, as much money as you can. And so when the time comes, you're liquid and you can buy up as much properties as you want. I didn't know what I know now in 2008. So now I'm liquidating everything that I have so that I'm prepared when this next recession comes around and I can buy up as much as I can afford. So I'm getting so liquid. I'm not buying any more flips. I'm not buying any more. I'm not doing any more fix and flips until, probably the middle of next year. I'm going to focus on other parts of businesses that I have to make sure that I'm liquid to be able to capitalize. You know what I mean? So I think you guys should do the same thing. But one of the things that I want to touch on now is the real estate investing myths. Considering you listen to this, you probably in the real estate are trying to figure out some things to do to make money. I just showed you guys a bunch of things about real estate because I think real estate is great. There's so many different facets to it. And it's the number one wealth creator of all times. You know what I mean? So it's that for a reason. But a lot of people think you need to have a real estate license to become an agent. And you don't. I did a podcast yesterday with a Keller Williams agent, and we talked about that. And you don't need to be an agent. You just need to know a bunch of great agents. I think the benefit of being an agent is, for instance, when you're in a market that's not really hot and you have properties that you're flipping, you need to be able to have multiple income streams, because if you're spending a bunch of money, you don't have any money coming in, then you're gonna get stressed out because there's no influx. So you're constantly spending. Where's the money coming in at it? You don't get that money back until the house is flipped. Especially if you're doing single family flipping, there's no rental income coming in to be able to support until that flip is done. But if you're a real estate agent, you can easily list and sell homes until your flips get done. So, the agent that I was talking to, he has about 9 listings, and we're doing a flip together. And so he's not getting any money from the flip we're doing right now, but he's making money from being a real estate agent and listing properties for other people. I, on the other hand, have to do other things to generate income until these flips get done, and that's just the nature of the beast. So you don't necessarily have to have a license, because I have great relationships with agents in all the markets that I invest in, and I mean multiple agents. So I don't need it. I can ask them, they can get pretty much whatever I need. But the advantage to those guys, even my agent in Vegas, he does flips. He does it too, but he can list property. So I think he has 5 listings where he might make $100,000. So he's making that on the side of making money on flips. So you don't need a real estate license. Don't think that you do. It's not a part of the investing. You know what I mean? It's just not, it's two separate things. And you don't need to risk your own cash, credit, or get funding. So I got a deal in Vegas where we're going to make $180,000. And I put up no money. I didn't use any of my own money. Not for, I used a little bit, maybe for the rehab. I think I put up a couple $1,000, like, you know, 5 or 6, but not a whole lot of money. But then there's the flip that I got in Augusta that I didn't put any money up. You know what I mean? So the house in Vegas is like $375,000, and I didn't put any money up. So you don't really need your own cash. And I didn't use my own credit for any of these as well. I used my credit for one because I did a hard money loan on it, but I didn't use any of my own cash. But I did use my credit for those. But the strategy that I will tell you about is one that I say you can use in a recession because people are going to be losing their homes. And with that, people get divorced because of finances or a whole bunch of other things. So you don't really need your own cash or credit when, you know, the strategy that I teach, and I'm teaching my students now. And is the local market bad for real estate? I don't think so. It just depends on your market. But people think, man, my local market is not so great for real estate. You could be right. In my particular case, I'm in LA, and LA is not a bad market for real estate. It's a bad market, in my opinion, because I don't want to spend $500,000 on one house. I'd rather spend $500,000 on 10 homes. So is LA a bad market? No. It's my local market, and it's not bad, but do I want to spend the amount of money to acquire one house here? No. I'd rather take $500,000 and buy a 70-unit apartment complex in Augusta or Atlanta for $250,000. So these are all the myths that people believe. I need a license, I need my own money, and my market sucks, which is totally not the case. You know what I mean? And if it does, hop into another market. So,
oh, you still here? Man, thank you for making it through that long video. But if you can see, I broke down different data points letting you know that a recession is definitely coming. It's a matter of when. It could be 2020, it could be, 6 months from now, it could be after 2020, but you see the data is there that shows you that it's definitely coming, so be prepared. Don't wait till the last minute. You watch this video, then you can go and get your own information and do your own deductions, but I pretty much gave you information on how to read a chart. So go out there and do your own due diligence, but be prepared. You know what I mean? Like, I'm liquid. I'm trying to get liquid. I'm selling all my properties so that I'm available to buy properties, even if they drop from 30 to 50%. It's better than what I'm paying right now for market value. So if you want to learn different strategies, if you notice, I was actually going to get into negotiations. I don't know if it was cut off, but the video was already long, so I don't want to go any more into negotiations. I broke down some myths that people have in real estate. But if you want different strategies, if you want to shadow me for a day, if you want to shadow some of the mentors that we have at Residual Roads, go to residualroads.com and sign up for a class that we have coming up. The next class, I think, is in a couple weeks. If not that, you can get a mentor. Just get a mentor if you already got an idea of how you want to do real estate, or you have kind of a foundation. It never hurts to have a mentor, but go there, take a look at that. If you want the information that was from this video today, like the PowerPoint slide, send me an email at hstewart@residualroads.com, and I'll gladly send it to you. If you want to shadow me for a day, shoot me an email as well, or just go to residualroads.com and sign up for one of the packages that we have to be shadowed by a mentor if you want to go out there and do that. But again, guys, all the data is there, all the information is there. Consumer spending is down. Like, the cost of goods is up. All the signs that a recession is coming. Everyone needs money. All your friends are like, man, I need money. I don't have any money. These are clear signs that a recession is already kind of taking effect. It may not just be bottoming out like you saw in 2009, and the housing market won't do, like I said, the regulations are there, but when that recession hits and it's coming, it's going to bottom out like that, just like it did back then. It's going to be in different aspects. It'll definitely be jobs, but it might not be real estate and things like that. But again, thank you guys for making it through this entire video. If you liked it, if you want to share it with a friend who has been talking to you about what to do in a recession, please do that. But definitely do something about it. Don't wait until the last minute, and subscribe. See you guys in the next video. Peace.